Good morning, Bernhard, and thank you for
Hi.
taking the time to speak with Edison TV. Could I start by asking you to provide us a brief overview of USU's operations, please?
Sure. What USU is doing is that we digitize service processes with our software products. You can do that in the IT or in the customer service, so internally and externally, it's possible to do that with our technologies. So wherever you have a service experience, USU technology should be responsible for a positive surprise or a positive experience in that way. So, for example, when you are in when you call a service center, um, you have some questions because you have problems with your printer or with your service provider or whatever. Um, the agent from that customer or service center should give you a perfect answer with our technologies, with our chatbots or with your self-service capabilities and so on. So we deliver the technology to enable the call centers to do a perfect service job. And the same is possible in the IT service management organizations. A lot of these organizations have the challenge to automate their activities or to generate cost transparency in their service, or simply to steer the whole organization and to make it more service oriented. And we deliver our software technologies to these IT service organizations so that they have everything in their hand, that they can deliver a perfect IT service to their customers. So everything follows our vision. The whole world is touched by USU empowered services.
Can I ask you to please provide a brief overview of your first half performance and the strengths, the key areas of strengths for USU in that period?
Yeah, we were happy that we started extremely strong in the year. So for sure, in January, February, Corona was not on that level we have it now, but we also saw Corona for sure in the market in Q1 a little bit and in Q2 definitely. But aside of that, we started, mentioned again, very strong. We had high growth. We even had a very good earnings level, not typical for us in the first half of the year because due to closings of on-premise software, we normally tend to have stronger Q3 and especially Q4s. So we are overall extremely happy that we are stable and that we could grow. And responsible for that are multiple factors. So one for sure is that our portfolio fits perfect into the time we're currently in, not only with Corona, also with the whole digitization trend. So we see that the challenges our customers have currently, we perfectly cover with our portfolio. So they currently need cost transparency. Where do they spend for cloud solutions, or where do they have IT spendings for on-premise and maintenance, and premise licenses and maintenance for that? So with our technologies, we can detect possibilities to save budgets. And I think especially in the first time or the first weeks or months of the high Corona crisis and the first wave, they saw where they have gaps in the digitization of their service processes. So they had to move a lot of people in hours or in weeks from the offices to the home office situation. And there was really visible where you have media breaks or where you have not that digitization level you should have. So with our software, we can help them to bring especially their IT service and customer service to a better level. A second argument for our current strength is that the customer mix we have is very good. So when we look at the customers who were harmed very on a high level regarding the Corona crisis, we are working with roughly 80% of our total customers are not affected so much. So the industries like the public or the finance, especially the insurances and the tech companies, these groups are realizing roughly 80% of our total revenue. For sure, we have also customers in aviation or in tourism, but on a very low share of the whole revenue. So the overall mix is very good in these times. And the third argument why we're doing very well is that over all the years in the past, we worked very solid. So we have a very sustainable strategy. We are growing step by step. We are profitable. We have no bank liabilities. We even did manage to generate cash. So cash flow was also very good in the first half of the year. And so overall portfolio, customer mix, and solid strength and sustainable strategy brought us to the power to deliver in the first half of the year a very good result.
What has the impact of COVID-19 been on your operational and financial performance? But more importantly, can you give us some idea as to what's the outlook for the second half of 2020?
So for sure, after a perfect start, we would like to keep on going that way. But overall, for sure, Corona takes a longer period than we thought at the beginning. So currently, we're in the mid of, or we're at the beginning mid, nobody knows, right? Of the second wave. So we're cautious to predict what will happen in the second half of the year, but as we are on a good way, as we have learned to handle the situation, as it is easy for us to move our employees into the home office. Due to our business model, as we are a software company, we have no on-site production needed. So it's good and easy for our R&D people, consultants, and so on to work from the home office. So we kept a very high level of utilization in that area. Where we were harmed more is in the marketing area. More or less no events happened on site, so every formats have to be moved into a digital format. We also realized our on-site USU World, our yearly big conference for the whole portfolio, into a digital format. And that went well. I think we reach a lot of people, but it's not 100% the same like an on-site meeting. Small discussions with customers or potential customers sometimes are missing. So I think also our customers are step by step moving over to be more familiar with all the digital formats. So we will have a little bit gap, a lead generation gap from Corona. This could be covered by digital formats, but not totally. So again, we are a little bit cautious for H2, but we're coming from a high level and a sane level, and we're coming on strength. So overall, we predicted or we forecasted growth for the second half of the year. We will see a little bit higher SaaS share. We are currently in a transforming situation from selling on-premise software to selling SaaS software. So customers have the choice to do it this or that way. And we see that in the Corona situation, more customers tend to have it on a SaaS way. No problem for us, but for a specific quarter, it will have a difference, because for sure on on-premise software selling situation, you have the whole budget in one quarter. If you sign a SaaS contract, the revenue will be spread over the periods of the contract. So no problem for the overall earnings, but maybe for a specific quarter. So with that effect, I think we will keep on being profitable. That's a good signal, I think. We keep on growing organically. And so, yes, cautious, but with a positive part of that for the second half of the year.
Going past 2020, in the medium term, USU is targeting a 10% annual revenue growth. Can you tell us what are the key growth drivers going to be to achieve this target?
Main driver, on my point of view, is our portfolio. The portfolio currently covers most of the highest or the best IT trends we see in the market currently. So when we look on that, everyone wants to move their technology into or use move their technology into the cloud or use cloud solutions. We are offering very good technologies to manage that situation, so that you have all the transparency of the costs you generate with your cloud initiative. We have technology, software components to do the cloud management, especially when you have a hybrid infrastructure. So you have a lot of servers internally, but also tend to use external technologies. So you have to move both worlds together in a so-called hybrid situation. We see that in the IT service organizations, a lot of automation takes place. So that a lot of customers tending to automate their processes, and we have technologies in that area too. And for sure, artificial intelligence will play a bigger role in the future. And we have a small team, a startup, which cares about our internal artificial intelligence initiatives, but also offering solutions for the machinery industry in that area. Second part will be our internationalization. I think we have a good step to go in our new markets. We have for sure USA as our biggest market outside of Germany. We have a good operation in France, and over the partners in a lot of other European and markets and in other continents. But I think we can grow with that internationalization in bigger steps in the future. Currently, we're realizing roughly 30% of our total revenue outside of Germany. In future, it could grow up to 40, 50%. So high growth rates should come from that area. And the last point we see is that I mentioned that we are currently in a transformation situation from on-premise software to SaaS. We see in the future a higher SaaS share. So the increase of that SaaS share will also push our overall growth rate. So the 10% annually is that in average is that target we can reach with these three major items.
Historically, USU is no stranger to M&A. So will there be some M&A involved in getting to this 10% target? And can you tell us what are your criteria for M&A?
So currently in our guidance we gave with a 10% average, there is no M&A activity included. So we should generate this growth with our organic potential. But for sure, M&A is one committed column of our total business model. So we would like to acquire further companies like we did it in the past. And so M&A definitely plays a role in the future. Maybe from Corona at the end, the one or the other opportunity will occur, so that the one or the other company wants to have a stronger partner for the future. So this could be, on my point of view, a potential for the next years. So what we're normally looking for is that the company should grow for sure, roughly the same like we are growing, maybe even better. We would like to add a different or additional technology which completes our existing portfolio, so that we have a link from that company to our existing portfolio. The company typically is profitable, has a well-established customer base. In size, could be 2-digit million in revenue. And it would be perfect if the company is still fully in the hand of a founder, so that the founder sees that his built company, his grown company, will survive in our portfolio and will maybe even grow faster than it can do in his hands. So that's roughly what we're looking for.